Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lady and Bert, the Dividend Diplomats. Guys, today, this is going to be a fun one. We're talking to you about one of the dividend investing community's favorite REITs. Whenever somebody says, we ask, what's your favorite REIT? This one is always at the top of the list right now, Lanny. We're not talking about Realty Income. We're not talking about American Tower like I like to. We're not talking about some other ones. Find out which REIT we're going to be covering today that has that juicy 5.6% dividend yield.
Smash that subscribe button. Give this video a nice thumbs up, guys. Yes, we are talking about a REIT that is very highly publicized in the dividend investing community. We talked about this REIT 2 years ago, maybe.
Yeah.
It's been quite some time since we talked about this real estate investment trust or REIT. And again, keep in mind, REITs are taxed at your ordinary income rate, and they typically, look to pay out up to 90% of their earnings. And we don't use earnings per share in the valuation. We use funds from operations or adjusted funds from operations as a form of EPS when evaluating REITs. And REITs have been getting hit hard. I mean, guys, interest rates, that's how they grow. They borrow and buy properties and get tenants. That is what REITs typically do.
And they get smacked when the rates go up and they go high because they have all that debt on their balance sheet, which has created some great opportunities. Why I scooped up Realty Income. This one, though, when you tweet it out or exit out, whatever it is that you do, this is the one that the community has that I've never bought, and I don't think you have, Lanny. Or do you own them? No?
I do not own this REIT. Not that it's a bad thing,
No.
but I don't own this REIT.
So is that going to change? We're going to find out because today we're talking about VICI Properties, ticker symbol VICI. Was that an Italian enough accent for you, Lanny?
Hey, you lay it off me. You take it easy, Vici. All right, guys. Vici, though. Yes, Vici REIT or Vici stock. We are seeing, is this a great REIT to buy? Is Vici a great stock to buy right now? But Bert, a little bit of background on
Yeah.
Vici. There's just this big entertainment conglomerate, really in the gambling and family experience, could you say?
Yeah, that's exactly what it is on their website. It's gaming and experiences. That's exactly what it is. They say they have 54 gaming properties, 39 other properties right now. You go to Vegas, you know them. You got your Venetian, you've got your MGM Grand, you've got Caesar's Palace, you've got Excalibur, New York, New York. A lot of them in that part. They own a
Huge chunk.
huge chunk of the Vegas Strip. Outside of it, though, the other experiences, they're actually nationwide. Sure, there are casinos. They have all the casinos in Ohio, too. They have the Cleveland Casino, Cincinnati one, the other Cleveland one, Northfield Park by us up here, Lanny. So they got casinos everywhere. They got some in New Orleans. They have Harris. So they got a lot of gaming properties. It's not just Vegas. They're diversified in the gaming sector. But Lanny, what are some of those other experience properties that Vici has that helps you diversify away from just that gaming sector?
You got those great wolf resorts, those Kalahari family adventures, guys. The Canyon Ranch, which I've never seen. They do have a bunch of golf courses. So they have all these experiences that they try to have you and your family be able to enjoy. I know Kalahari is a couple hours away from us, I believe, here in Northeast Ohio.
Yeah.
There's a Great Wolf Lodge somewhere within a few hours as well, I'm pretty sure. So yeah, they spread their tentacles within the experience of families.
Yeah, and look, it's worked really well for them. When you go into their investor presentation, they've had 330% EBITDA growth since 2017. They've had very strong dividend growth. It's in the high single digits over that same time frame. So they've quickly scaled, they've quickly grown their property portfolio significantly, and the results have been great. And that's why a lot of investors have loved them. Their stock price is up 31% over the last 5 years as a result.
Yeah, I mean that's a massive, massive growth. Um, keep in mind though, we'll have to really see if they've grown a lot now, have the funds from operations though kept up, and what does that mean for dividend investors from a growth standpoint and a current payout standpoint? Because Bert, isn't there a certain target AFFO payout ratio that they look for?
That's right. Their target in these presentations they talk about is a 75% target payout ratio. Keep that in mind because we're going to tell you what their payout ratio actually is a little bit later on in this video when we talk about when we run them through our stock screener. So keep this all in your mind, everybody, that they target 75%.
75%, guys. So let's dive in to that earnings release. Let's peel back the cover on VICI Properties. Let's see what this VICI stock is all about here. Again, we are filming this as of May 12th at night here. So the recent trading price of VICI is $29.50. But Bert, they reported FFO, funds from operations, for 56 cents a share, which was 1 penny higher than last year.
Yep, their revenue was 952 million, barely beating estimates of 936, and it was up from 932 in the previous quarter and 877 a year ago. So not bad revenue growth on the top line. Operating expenses remain the same, so they grew revenue, but they kept expenses the same, which is always great to see you pick up some margin there. EBITDA too, you saw the growth as well while we're going through it, 765 versus 710 a year ago. So yeah, they're squeezing a lot out of these properties that they're getting, and they're realizing the revenue's growing, EBITDA's growing, but they've been able to successfully keep expenses flat, which is a great story you want to hear out of any business.
Yeah, yeah. I mean, gosh, yeah. I mean, 100% rent collected. It's amazing.
Yeah.
They reaffirmed guidance, which is, very. Now it's great when companies do that because we've seen a lot lower guidance, recently. I don't want to get into the names.
We're getting
It's too,
flat.
yeah, it's too soon, right? It's too soon. But they are targeting that FFO of 222 to 225. So in our analysis, when we run them through the Dividend Diplomat stock screener, we will look at 225. But Bert, before we dive in, what are some of these new activities that
Yeah.
they're doing that kind of is, I don't know, would you call these head scratcher, at least the first one?
Yeah, the first one is in Kansas City, Missouri, a Margaritaville. They're putting up $105. They got a big, yeah,
Margaritaville.
9-figure loan for Margaritaville. And we were just talking, there was a Margaritaville built in Cleveland, what, 5 years ago, Lanny? 5, 6 years ago?
You know, some time ago, and we should give it a little test. We should bring families out
Yeah, if we're
and
taking the families of
enjoy
Margaritaville.
Margaritaville.
Yeah, I mean, we had to look up before this video to see if it was even still open. That's what we like. We're the wrong people, obviously.
Toby Keith restaurant that closed, I think.
Yeah, that's right. So I mean, it's an interesting location, but they're trying to make some moves here. They're expanding outside the box a little bit. They're also putting a ton of money into the Venetian as well. I know Realty Income's dipped their toes in the Venetian pool as well. So they're doing some other things. The Venetian's up their alley. It's just the Margaritaville is the one that just cracks me up because that's just you're just gonna have a hard time getting me to believe that they're in Kansas City, Missouri. It's gonna be a great property, but I could be wrong.
Looks like we're going to have to go down to Vegas and really check out the Venetian, right?
Yeah, I guess so. So
Little
now,
diplomat trip.
yeah, I like it. Some market research for a video. I dig it. I
Hey,
dig it.
dividend investor, if you want to get us to get down to Vegas for a dividend diplomat or dividend investing meetup, I'll let you boys.
Yeah, that's right. All right, so let's run them through the screener. Our metrics, and as you said earlier, Lanny, we replace EPS with FFO. So that price to FFO ratio, payout ratio, history of increasing dividends, and that dividend yield. Lanny, can you kick us off here with that first metric?
We will kick it off with that first metric, guys. It is the price to AFO, AFFO. It's 13.11. So they're trading at 13 times funds from operations. Not bad.
No,
Not high, not low. So they're right there.
that's right. Their payout ratio at that $1.66 dividend is 73.78%. Remember, they target 75%, so they're bumping right up on that management threshold there.
Interesting. So if they're at 225, $1.6875 would be 75%. So dividend growth might be in that 1 to 2% possibly this
Yeah,
year, based on what they say.
yeah, and now you see why they're stretching for Margaritavilles to try and get that revenue up so they can increase that dividend. Their 5-year dividend growth rate 7.76%. They've increased that dividend for 5 years. And what is that yield here, Lanny?
Well, the dividend yield, I think this is why the REIT investors, dividend investors, obviously because VICI is a very well-known REIT because of what they own. The dividend yield now is about 5.63%. That's gone up quite a bit because they are down about 10% this year.
Yeah, that's right. And that yield now is 66 basis points over its 5-year average of 4.97%. So another sign of undervaluation.
So people are flocking from O to go to VICI, or what's going on with VICI investors?
Yeah, so we'll put the metrics up here. Here's my take on this. I still don't know. There's always been something that's held me back from investing in VG, and I really don't know what it is. And these metrics aren't sitting here screaming like now's the time to get in. I think what's interesting, and maybe this is from being burned in past experiences with other REITs. You have REITs that are in like a hyper growth mode, and that's what you're seeing here with VG. And they've done it very well. This is not a knock on VG at all. They've been able to grow even to 330%, as I said earlier. So they've been very successful scaling. But what's next, right? So they've gotten to that point. What's going to be their next way to really grow revenue, to really grow earnings? And maybe they're going to do a great job of it. But as you saw, that payout ratio is right at that 75% threshold. So how can you keep up that astronomical dividend growth, that astronomical revenue growth, if you potentially peaked out with some.
A stimulus is what they need from the government.
Yeah, and also too, conversely, that's a great point. But in the other direction here, Lanny, if consumers' budgets are getting stretched and consumers' budgets are getting pulled in, excess vacations, extra trips to Vegas are going to be probably the first things cut from people's budgets, unfortunately.
They're gonna have to get creative. Hey, take a note from McDonald's and get a $5 meal or get a $500 round trip flights, hotel, food included trip or something like that.
Yeah, so it's interesting. I'm just curious about where the growth's going to come from. So I'm
$5 foot long.
oh, but I'm still not buying Vici. I'll watch them though. They're not bad. What do you think, Lanny?
I'm not buying VICI. I've got a heavy REIT concentration in Broadstone, net lease B&L, and then I own Realty Income in the Roth. And then my wife, we have BRT apartments. So, you know, I'm I'm okay. VICI, nothing wrong with it.
Yeah.
You know, but I'm not buying right now.
Yeah, so everyone, let us know what you think about Vici. If you're going all in with Vici, let us know in the comments what it is about this REIT that you loved and why we're wrong in our analysis and why we should be buying Vici right now.
Yeah, let us know, guys, please. Is VG also a stock to buy right now at the current price, or do you think it's really pegged, you know, in the mid 20s? Let us know what you think the right price is for VG to start a position. But guys, definitely hit that subscribe button, like the blazing hell out of this video, and show us, your dividend diplomats, some love here.
And remember, if you're not with us, you're against us, Jack.
Oh, that was Bert, the Hurt Locker, and Lanny from the Dividend Diplomats. Over and out.